Hello and welcome to Beat the Street on this Thursday, the 26th of October. This is the show that gives you all the tradable news you need to work your way through to the start of today's trade on the Wall Street markets in an hour's time. We've got some breaking news coming through, which I'll cover in just a few moments' time. Let's take a look at the headlines as we continue to monitor what's going on with US third quarter growth numbers and durable goods orders. We could well get a steer on the dollar, which we'll take you through in the next couple of minutes. We've also got some breaking news as well coming through from the European Central Bank on interest rates, which we'll cover at the same time. Now, in amongst some of the stocks to watch today, looking for a potential 7% drop in the stock of Meta, the company which owns Facebook, WhatsApp, Instagram, and a number of other social media platforms. It is down. It is not down because of earnings. Earnings were good. It's the outlook for ad revenue that's the concern. And is Ford driving a bargain with the UAW? We have a tentative agreement ahead of earnings out tonight, later on today from the automaker, which could also show that the company is in a little bit of a tight corner. We are looking for some considerable amount of money to put aside to pay for these strikes, but is an agreement in sight. The workers have been persuaded to go back to work today while they discuss it. So let's take a look at what's happening now with some breaking news coming through. I want to talk about the US markets first of all, before we get onto the European Central Bank. Now, this is the minute-by-minute chart for the Dixie. This is the dollar basket. Not much move, it has to be said. We've got US GDP numbers coming through. We have got a figure of 4.9%. We've been looking for something like around about 4.2, 4.3%. So this is better than expected. It's not done much to the moves at the moment, but that is a good number for growth, despite the fact we've got interest rates high. But what it means is, it means there would be more of a concerted effort by the Fed to maintain interest rates high in order to quell inflation, which is absolutely got to be done in order to maintain the economy in the direction in which it's going. And it's, if you look at the GDP numbers year on year, it looks pretty good. We've been looking for a 0.2% rise for durable goods. That came through at a 0.5 reading. So that too is expected. Initial jobless claims have been looking for 208,000, 210,000 on the board. So I think really all what's going on at the moment is all about what's happening with the US GDP numbers, which have come in. Let me just quickly tell you a little bit more about what's going on with the dollar as we look to the effect of the numbers coming out. Now, I've had the Andrews pitchfork on here. For those who've been monitoring what's been going on this week, I've been talking about this in Beat the Street before, and I've also been talking about it in the early morning call. The long handle here, you can see, is the trend that we've had in place since the lows we had back on the 18th of July, right to the swing high on the 3rd of October. Then you get a little bit of a pullback. And you can see we're actually running alongside these channels. The channels are standard channels for Andrews pitchfork. You can see the way in which it's bounced off the initial lows in this trajectory, it has to be said. And then we got a pullback and a break. Now, if we got a break out of the bottom of this, that would have been over, but we didn't. We got a support there, which includes the 50-period moving average. Then we got this rise, and indeed we're now moving back into one of the central channels, which is then basically part of this trend that we've got. So this is just a little bit of a retracement we've got. So long on this, with a stop below the 105 level, 106.39 is where we are. They continue to trade long on the US dollar. Now, let's take a look at what's happening for the euro dollar, which is the way to trade this if you don't do dollar basket. We can see that we're off the lows at the moment. I was just talking a little bit about this in terms of my social release just before Beat the Street. And I was talking about the direction of travel. We got this 105.16 level of support, which we just bounced off today. But I don't think that's necessarily going to be a long-term level of support to watch out for. I'm more interested in this level down here at 104.48. And a short position on this would accompany a stop loss above this prior line of support, now resistance. So you'll stop at around about the 106 level. With a view to taking this, I think, further lower in the days to come. Now, all part of what's been happening here is what's going on with the European Central Bank on interest rates. Let me just quickly talk you through what's been happening. It's kept interest rates unchanged, bringing an end to its unprecedented streak of 10 consecutive increases in interest rates. Let me just change this onto Euro GBP to see just what's happening there in terms of the movement that we got for the euro against sterling, which takes us away from the moves that we had where the dollar has been so dominant. This is the euro falling against sterling. We've seen the euro flatline. I think that's probably the best way to do it against the US dollar. But here at the moment, we got the euro falling against sterling. Bearing in mind, these are 5-minute candles. This doesn't actually take you back very far. It takes you back to, what, Wednesday the 25th, so it's only yesterday. So it's just an indication of what's happening. That's all more than anything else. But it is a story where we're seeing a weakening euro against sterling. The decision by the European Central Bank, which was announced after the rate setters gathered for this most recent meeting, Eurozone inflation is absolutely the target. Benchmark deposit rate is now 4%. The 4.5 percentage points above its all-time low of a minus 0.5%. We've seen 10 interest rate rises, and this is the first time we've seen in 10 meetings, we've seen the European Central Bank stay on hold. It is focused on the inflation side of things, and it will want to keep rates higher for longer, as long as possible. This is the way in which the euro has travelled in the longer term, with expectations the European Central Bank may well outperform in terms of interest rates against the Bank of England, looking as though the Bank of England could keep interest rates on hold at the next meeting. And that's exactly what we've seen here. So not an awful lot of move for the euro. If anything, a slightly weaker day. But broadly speaking, the euro has been gaining weight against other currencies, including sterling, of late. So that's where we are in terms of some of the news that we've got out in some of the companies we've been watching. I'm also watching for breaking news as well coming through from Caterpillar, which I don't see. I've been looking for this. This is the heavy machinery company, which is a business which is heavily tied into what's happening with the mining sector. It doesn't look like we're getting anything through from Caterpillar. So let's move on and take a look in some more detail about more of the stocks to watch in today's trade, because I want to follow up on some of the companies we've been dropping in over the last 18 hours or so, where we're going to get some steer at the beginning of today's trade. Meta is one of those. It reported better than expected results late last night after the close of Wall Street for the third quarter's revenue increased 23%, now the fastest rate on growth since 2021. Let's take a look at the numbers as we saw them break today. Yesterday, I should say, $4.39. We'd be looking for $3.63. Revenues 34.15 billion against 33.5 billion, which was expected. That revenue mark up 23%. This is the fastest rate of growth since 2021. And you'll remember Google and Snap also reporting these figures of ad revenue. Google said it was only up 9.5%. Smaller rival Snap reported revenue growth of 5%. And so you would expect Meta to have done well on the trading day. But if you look at the chart, you can see quite clearly here the drop that we saw. Initially, there was a rally in the stock because of these good earnings, but because we also saw daily active users up, we saw the average revenue per user climbing as well beyond expectations. So it all looked pretty good news. Then all of a sudden there was a press conference, and then Susan Lee, the chief finance officer, said that there'd be potential advertising revenue softness tied into the Middle East conflict. You remember we saw exactly the same headline coming through from Snap just a couple of days ago. Look, Meta stock price is up 150% this year, the second best performer in the S&P 500 behind the AI chip maker NVIDIA. So it's done great business. This is an excuse, I think, as much as anything to sell into some of the profits that some of the people have been holding on to. But I don't think it's game over for Facebook in any way, shape or form, or Meta, I should say. I think it's important to keep in perspective what's happening with the other parts of the business, where there is an enormous amount of revenue coming through. Another company reporting late last night, which is another company reporting, which is all sessions on the IG platform, so we can get a steer on where it's going to be in an hour's time when we see Wall Street get underway. We're looking for gains for IBM. It came through with third quarter earnings last night that beat estimates after the bell. Earnings per share, $2.20, adjusted against $2.13 expected. Revenue, 14.75 billion. That's pretty much in line with expectations. But the revenue line was growing at a margin of 4.6% year over year in the quarter. Excuse me. The company's software unit producing 6.25 billion in revenue. That's up around about 8%, in line with the consensus. Let's take a look at what's been happening with the share price. Because yesterday, you had to bear in mind, we've got all sessions trade at the moment. We're trading on the way up as well today. We saw a gain of around about 1.6%, I think it was yesterday in all sessions. We're off the highs, but we're adding to that at the moment for IBM. So it's another stock where we could see some gains. Now, insofar as what's been happening with the stocks that have seen some performance, let's take a look now at some of the stocks reporting after the bell this evening. We've got Ford, we've got Intel, we've got Amazon. Let's take a look at Amazon after the bell this evening for the third quarter. It's forecast to report an 11% increase in revenue to 141.59 billion, and a more than doubling in adjusted earnings per share of 58 cents. Now, the thing about Amazon is it's by far and away the largest e-commerce company in the world. E-commerce remains a key driver of the top line growth for the company, with online stores the largest business segment, representing around about 40% of the entire revenue. This segment is forecast to grow by 6% to 56.8 billion. But there is a massive part of the business which is getting bigger and bigger by the quarter. Amazon Web Services. Can it maintain its stellar growth that it's seen? Now, Amazon is the largest publicly listed cloud company in the world. In the June quarter, Amazon increased AWS sales by 12% to 22.1 billion, a significantly lower growth rate than in recent years due to a cautious spending by enterprises. Look what happened after the bell last night in the wake of the Meta numbers. Pressure has been applied to Amazon because of Google and other companies like Microsoft who have web services. Microsoft did particularly well, you remember, and the stock was up. But Amazon stock down yesterday. This company reporting earnings after the bell this evening. We are watching it all sessions on the IG platform. It's expected to open lower when trade gets underway today, but you can trade this after the close tonight when the company reports those earnings. Another business on earnings after the bell this evening could well be one to trade, and that is Ford Motor. Third quarter earnings, of course, we've got the strikes for the UAW, but there's some good news there. Let's take a look first of all at what we're talking about in terms of earnings news. When the company comes through, we're expecting $2.04 per share earnings per share, revenue, an 11% increase year on year to 40.3 billion. We have now got the news that the Auto Workers Union have reached a tentative labour deal overnight with Ford Motor. This is the first of Detroit's big three car manufacturers to negotiate settlement of strikes, joined by some 45,000 workers since mid-September. Let's take a look at what's happening with the share price chart, because you can see the declines that we've seen since midsummer when the strikes started, and most recently again when we saw strikes accelerate. JP Morgan estimates strike costs amounted to 145 million, which will see Ford take a hit on that tonight when it produces these third quarter figures. That's in terms of earnings before interest taxes during the third quarter. These losses, though, are expected to have ballooned in the fourth quarter to 517 million for Ford after the union initiated that work stoppage at Ford's most profitable US truck plant in Kentucky. Now, we will doubtless see some sort of forward projections from Ford after the closing bell tonight, and I think it could well be negative because of the amount of money it's had to set aside to cover for these strikes. Anyway, Ford at the moment is up. It's up for a second down a row. In fact, we saw late yesterday, we saw the stock gain in the news after the bell last night on Wall Street that the strikes had been, looked like they had been negotiated out. We got the vote, I think, in the next day or so. My understanding is that workers have been requested or required or asked to go back to work while these discussions are underway. It'll be interesting to see if we get a break in those discussions with some news, positive news out on the strikers after the close of the market tonight when the company comes through with its third quarter figures. Another stock to watch after the closing bell tonight is the chipmaker Intel, reporting its third quarter figures. The chipmaker looks to capitalize on a rebound in the PC market, but reports that rival Nvidia is working on its own ARM-based CPUs for Windows PCs could overshadow the announcement. Wall Street's anticipating adjusted earnings per share of 21 cents, down 64% year on year. Yep, that's right, 64% expected. Revenue down 11.7% at 13.5 billion. And this news about Nvidia means that the bottom line is that Nvidia is about to, or looking as though it wants to steal some decent lunch from Intel. Intel has had all sorts of problems of its own, as we know from a number of different stories over the last few years or so. And in fact, if you look at the Intel share price, this red part of the chart is all about the fact that supply chain issues in the wake of COVID, and the company found it very difficult to ensure the right chips were made at the right time, delivered to the right people to get the income coming through. Anyway, that low point we saw down there at $24.50, we are at the moment trading all sessions on the IG platform after losses late last night at 32.84. Another stock to watch after the close of the markets tonight for Intel. Let me just wrap up and take a look at what's happening in terms of some of the moves on the indices. As we've already seen in terms of the move, first of all, on the US dollar. I just want to show you this chart again just to show the dollar is now off the highs in today's trade, but we're still seeing gains on the US dollar. Now, in the wake of that stronger than expected growth figure, we were expecting some decent rebound in these markets. We have a rebound, but of minor sorts on the IG platform. These are what, 15-minute candles, and you can see in the last 15 minutes there's another 15-minute candle just popping in there. We've got upside here. That is because growth has come through stronger than expected, and that is good news for the outlook for equities. We are looking now at a slightly stronger start to the US markets. We were trading, I think, 32,900 and something as at the close last night, the cash session. We're just above the 33,000 level. So that's looking as though we're going to be seeing a slightly stronger start to the trading day on the Dow. The problem is with the S&P 500, but more so the NASDAQ, is that we have stocks that are heavily geared towards growth, and they like a low interest rate environment. There's no way that the Fed is going to keep or start to steer interest rates lower when it knows it's got growth like this, when it knows it has an inflation job to beat. The Fed is likely to keep interest rates higher for longer, and that is something I think is going to be a real headwind for these tech stocks. Now, the S&P 500 in the last few years has built up its tech listings in favor of some of the older economy stocks, so it has a more tech flavored now. And yesterday it broke this line of support at 4,200. So going into the start of the day's trade, we are certainly expecting a little bit of a drop at the start of today's session. But this little bit of a green candle is encouraging, but I don't see it changing anytime soon. I think the Dow is going to be the outperformer on the upside at the start of today's trade. A little bit of a green candle as well as we see things get underway earlier on this morning for the 24-hour markets. But the NASDAQ, steep losses late yesterday, and you've got to consider that when looking at the start of today's trade. So just a quick update. Got better than expected growth. We've got slightly better than expected durable goods orders, and the weekly jobless claims looking pretty much as one might have expected. Looking for gains for the Dow. Possibly we could well see a bit of a mixed start for the S&P 500 and the NASDAQ. A day of gains for the dollar as a result of that stronger than expected economic data. That's the message I want to leave you with. I'll be back at 4 o'clock this afternoon, taking a look at some of the tradable events to watch out for tomorrow morning. It's back to banks tomorrow morning with Nat West. I'll be here at 7:30 on the IG platform, taking you through that. And at 4 o'clock this afternoon, a quick wrap up of some of the stocks and some of the economic events to watch out for on Friday, the 27th of October. That's it for today's Beat the Street.